Hey guys, what's going on? It's Anthony. Welcome to my Twitter feed. And in today's video, we're going to be talking about what banks will require of you if you took a hardship deferral on your loan or credit cards. I know a lot of you might be anxious because you're not exactly sure what banks are going to ask you to do because they weren't exactly super clear when they gave you the deferral for either 3 or 6 months on your mortgage, auto loan, credit card, personal loan, whatever it was. But in this video, I'm going to give you the 3 main options that you might have to choose from when you decide how you're going to end up paying back this loan after your deferral period is over. My name is Anthony, and on my channel, I'll help you go from not knowing what a Roth IRA is to being able to invest in derivatives and fully understand what you're doing. So if you're interested in really getting a hold of your personal finances, subscribe down below. So if you didn't know, the jobless claims numbers, which basically measures how many people don't have a job anymore, went through the roof during the coronavirus crisis. It was unprecedented, and they were 6 to 10 times higher than we'd ever seen them before. That means that a lot of people who would have lost their jobs wouldn't have been able to pay back their loans, and then they would go into either foreclosure, repossession, or have to file for bankruptcy. So in order to not completely collapse the American economic system, banks and other creditors decided to give a forbearance to most people who had loans with them. And a lot of people who had hardships during this time took advantage of that, and you might be one of them. However, I know firsthand that banks might not have had the most set in stone rules regarding what you're going to do once your forbearance period ends. They really just had to get these programs out there so that you didn't have to worry about making these payments if you lost your job, because that would just add stress to your already stressful situation. So instead of doing that, they basically just said, hey, you know what? You can defer your credit cards and auto loans for 3 months, your mortgage for 6 months, don't worry about it. And then about 30 days before your deferral period ends, you're probably going to end up getting a letter in the mail from your bank giving you options, or maybe only the one option, to pay everything back to them. Now, for something like a credit card or another line of credit, it's going to be really simple because you don't have a term on that line of credit, and you're basically just making a minimum payment every month. So even if your interest accrues, you're probably going to make the same minimum payment for a while, and they're just going to extend out the life of how long it would take you to pay it back on your minimum payment. It gets a little bit more complicated though when you're talking about term loans, like an auto loan where you pay back in either a 48, 60, 72 month term, or a mortgage, which is paid back over 15, 20, or 30 years. Now with those loans, you're really gonna have 3 main options, because if you're not paying for 3 months, the bank's not just gonna give you that money. So unfortunately, if you thought that going into this hardship forbearance program meant that the bank was just gonna give you $3,000 if you deferred for 3 months on $1,000 payments, you're kinda out of luck, because you're actually gonna have to pay this money back, and most of these programs actually continue to accrue interest because the money is still out borrowed, but there's not gonna be any late fees and you're not gonna have to make any payments. So the 3 main options that you're gonna have when you get out of this hardship deferral time is gonna be modification of your loan, repayment plan, or lump sum payments. The modification of your loan is gonna be the most complex out of all these 3 options. However, it's going to be the simplest in terms of repayment, because essentially what happens is if you deferred for 3 months on your auto loan, they're just gonna take those 3 months and move it to the back of your loan. So your payment's not going to change, the amount of interest you're paying isn't going to change, because they just extended the length of your loan 3 months, which is what you deferred. However, in order for this to happen, you're actually going to have to sign new loan paperwork, because it's going to be a new loan. There's not really a way for them to just modify the loan that you already have. You have to sign a new loan, and for some people that might include running your credit again. So that's one thing to look out for if you do get the option to modify your loan. The second option for when you get out of a hardship deferral plan is to be put on a repayment plan. And what that means is that if you deferred 3 months of $1,000 of payments, that's $3,000 that you deferred. So the bank might say, instead of adding to the end of your loan, you want to get this repaid a little bit sooner, so they're going to add $300 as a special payment for the next 10 months so that you can get that repaid. That way, once those 10 months are up, you've paid back what you deferred, and you're going to be back to your normal payment. Now those are going to have a vast array of different times, as well as leniency from the banks, depending on how good your relationship is, your on-time payment history, and maybe even your credit score. However, that is the second option that you'll have. The third option is the one that most people wouldn't want, and that is the lump sum option, which basically means if you deferred that $3,000, once the hardship deferral plan is up, you just got to repay that $3,000. Now I know coming up with this lump sum might be difficult, because you might be thinking, if I could come up with a lump sum, why wouldn't I have just paid it all over time? And that's definitely true. However, luckily, a lot of the stimulus has been passed, especially in terms of unemployment benefits, which have allowed up to $2,400 per month extra of unemployment insurance from the government, would really help you with this lump sum payment if it is your only option. If you have any questions about this, leave them down below. However, now you know what the 3 options are for getting out of your hardship deferral program. And if you want to learn exactly what you have to do to get your first credit card and start building credit, watch this video right here, or any of these other videos that you might see fit for your financial situation. And I'll see you there.